Good morning, guys. Welcome to the Outcast Trading channel. As usual, let me know when, not if, but when my mic stops working, so I'll fix it. It seems like it's becoming my trademark here in the live streams. Today we have a stream which I planned for yesterday, but because I had to take care of my son, here we go today. So first, before all, if you like the content we're providing, like and subscribe, hit the bell icon. It helps us grow. Right now we're doing everything pro bono, and we like to share our knowledge about the markets and the way we see them. So cool, thanks Frozen. Anyway, so today we have a little bit of a topic. So before I go to the markets, we have a little bit of a clickbait: where your money goes when you lose it with a broker. And actually this is a question which I wanted to direct us to a different thing, which is taking the responsibility about your trades. Excuse me for a moment. Okay, I'm back. Seems like garbage collectors are always when I'm recording. You can rely on them 100%. So it brings the question not where your money goes, because everybody knows where this money goes. It goes to the broker and fees and the spread. If you're trading Forex, it works a little bit different. Honestly, like officially, there is no more, not much market maker type of brokers, but the truth is somewhere. So where you lose money as soon as you enter the market, you lose money on the spread, so the difference between your bid and ask, so between your execution and especially when you're trading Forex, there's nothing such as a true limit order. So even if you have a limit order, it's just a market order executed at the given price. So you lose on the spread, you lose on fees. Okay, with Forex, they're omittable in many cases, but yes, you pay them. So those two things for sure. There are different ways to lose money. And where it goes to the broker, it goes to the other participants, it just goes to the market. So many people think like it's a zero-sum game, which it is not. Trading is not zero-sum game, it's negative-sum game, if you think about it. So there is not a truth that to lose somebody, to win, somebody needs to lose. Okay, so for you to win, somebody needs to lose. We pursue different goals, and transactions made on the market serve different purposes. You can hedge and your position, you can play different time frame, you can play you can just you want to hedge your transaction. So there is a lot of things to talk about, and maybe not for today. But I'm going to talk today, while analyzing the charts, over why people don't want to take responsibility. So there's always a question: okay, where did my money go? So market stole it. Evil market makers or market movers, or however you call them. Market maker is not somebody who moves the price. It just animates the market. It just makes trading available for you and provides liquidity. So where people blame others for losing their money, and you could see me last week losing some money on this account. Did I blame somebody? No, it was just my fault, and it's always your fault. Okay, as soon as you make your decision to enter the market, you're basically a loser, and you need to work your way out to become a winner over time. So whenever you make a decision, just first of all, just look at yourself and look if it's not your mistake that you entered at the correct at the specified price, and that you got your stop loss wicked out. So people tend to cry about, okay, the evil market. It's like they're getting in some paranoia. Okay, they know where my stop losses is, and it's being hunted all the time. Fuck yeah. everybody knows where your stop loss is if you think about it. If you're placing it like almost all the internet teaches you below last week low, okay? So there's nothing really mysterious about it. I can tell where your stop losses is where you enter. You don't need algos for that, but there are algos finding the stop losses, and there are algos looking what those algos finding the stop losses will do. So there's a lot of complicated issues with the market. But anyway, you're responsible for your money, you're trading your money, and you are to blame, okay? So if you lose, it's your fault. Market is always right, and market doesn't give a shit about you. So believe me or not, it is making your life easier. Why? Because when you deny, when you try blaming others for your mistakes and for your stupidity, then you can't learn. And if you want to beat this game, you need to be focused on learning, on finding new knowledge, finding new methodology, finding new ways to improve your trading. And as soon as you say, yes, it's my fault, then you open your mind to the next question: what can I do to change it? If you don't accept the responsibility, you can't ask you. If you already given responsibility to somebody else, you can't ask yourself, and you can't learn. You can't ask yourself, what can I change? Because if somebody else is making decisions, not you, you're leaving your fate to something else. So yeah, this is the nice accent. This is a nice start for today's stream. Overall, let's go through the markets first, and probably maybe some comments will appear and we can talk a little bit more about other issues. Or you have any questions for me to analyze the market, any questions about strategies and placement. I have one in my mind, so I will talk about it. It will be about fibs. But first, let's go through the market, and let's start with crypto as usual. So here we are, BTC, nothing changed in the range. So it's just between 18,600 up to 24,500. This is the current range plus the liquidity here. So you know, by the support, so the resistance. This is what TA says. This is like how trading is supposed to be. Right now, nothing has changed. I think, which I'm pretty consistent with my opinion over the last few months. I think it will spend a little bit more of a time here in this range or the other range. But if you're thinking about a home run short from here, I have to say yes, it is possible, because when something dumps 80%, next day it can also dump 80% from the current price. This is magic of mathematics. But you had your chance to make a home run by shorting 67,000 or something like this. And right now it's just waiting time. It's just boring market, good for options, good for selling the premiums all around the board. Anyway, BTC is in the range, nothing to look here. Let's go with Ethereum. Ethereum is in a smaller range right now. So if we go to the weekly, we have a bottom around $1,000 down to 800, but it is staying for now in this nice little range between 1250 up to 1380, and doesn't look like it wants to move from it soon. Had a nice liquidity test last week? Yeah, last week. Overall, nothing here. I mean, if you want me to tell where the market will go, you can go to a Gypsy Queen or whatever. Like, I'm not trying to crystal ball shit here. Find some wizards who can. For me, the target to the upside is pretty easy, so at least 1600. If this range resolves to the downside, if it resolves to the upside, so it will be like 1600ish. If it resolves to the downside, I will be looking for 1000 and maybe even lower over time. What I think, this is not an advice and nothing. And this is not what I will be trading, because this is my opinion and I try to trade the chart, not the opinions. I think Ethereum can be bound for a while in this nice big range between $1,000 and $2,000, because this is a part of the good morning EO. So this is a part, the legend himself. So this is the part of trading the markets, and this is the part of the bearish market. It's not the inverse bullish market when everything just goes up. In the bearish market, mostly everything just goes sideways, okay? And it has random, about traps we'll talk to tomorrow. Because there's a lot of fun to be made out of the people thinking in trap way. So most of the time market will be ranging, and most of the time market will be having little pumps, dumps. It will play pretty nasty, taking all the players out of the market. I mean, crypto took me out of the crypto market. I'm not trading crypto for now because there's no opportunity there for now. And when everybody is leaving, then the liquidity drops, volatility can spike, but overall it's going flat, and yeah, bear market is just boring. So there is no shame if you will say, okay, fuck it, and I'll come. Hello, Mark. So I'll come later and I will get my my trading when the market will be bullish. No shame at all, you can do it overall. Okay, so here we have the crypto. I think Mark and EO are more on top of it. For me it's just a range, as I said, and nothing here. Let's go with the Forex, because this is what I play recently and this is my main market. This is the market I started trading with, and already like 8 years ago. So here we have, first of all, let's look at the daily, no fibs, no nothing, just a structure. So yes, we have placed a little bit of a swing low here. And right now, what it looks to me, it has a potential to play a lower swing high. So what does it mean? If it plays out to the downside, that I would think that there can be a continuation back to the bottom and testing it again. It's really hard to judge. Not much supports and resistances here. The price needs to work them, because we were not trading in this region since '84, before I was born. So this is like terra incognita, and I think the price can spend here a little bit of a ranging and fucking around. So just looking for a big nice movement. Okay, you had a year or two to get a really nice short. Right now it just try to play it safe. This is how I'm doing. And what we have today on GBP USD. So first of all, yes, today, and props for Mark for pointing it out, because it was indeed governor. It was a nice trade. So here you have, here we had a fib pull, where 61866 provided a really nice bounce. Nice is probably overstatement, because the price action yesterday was shitty as fuck. But overall, at least playing it to the like 1 hour 21 EMA or 4 hour 200 EMA or whatever you choose for your targets, it was a pretty nice entry. About the take profit, it's pretty unclear, because normally what we like to do when we are trading it, we like to wait for the 61866 on the inverse fib to be hit. It's so-called fibception. It's an outcast trademark, but feel free to use it whenever you want. So here we have a potential take profit. I'm not saying it won't hit it, but we just had an inflation release in UK, and I'm really curious what we have. Okay, so market. So this is the thing about the inflation. So here we have. I'll launch up my economic calendar. Let's go here, and as we can see, the consensus, so this is what market was pricing in, was 10%, previous 9.9, and actual is 10.1. So not really much have changed. So I don't think it will have a huge impact on the market. As usual, on the inflation release, the price tends to drop a little, which we actually we were watching crypto when GBP moved. Overall, it had a nice little dump, and today I will be probably trying to buy again 61866. Why not? Overall, the daily is a little bit complicated because it closed kind of bearish and it can place this lower high. But on the 4-hour, it's a little bit of a hopium to the upside. If this 4-hour will defend the 200 EMA and SMA, which are like I told you so many times, a mobile support resistance zone, and right now they are in a correct order, 200 EMA above SMA. Right now the price action tries to bounce off the 21 EMA, so if it defends this ribbon here and it goes up, yes, I think at least swing high here is possible. Okay, I'm moving the wrong thing. Okay, so here we have the swing high, bodies, using bodies and wicks here, so more or less like 1480 is in the cards if it bumps from here. If it goes lower, well, I think the price action has a potential to go to at least 11,800 and see from here, which also will be nice because we'll get our weekend gap filled, and the price action will complete its cycle. Anyway, gaps are the other topic. So let's go to Euro USD, because there's no inflation release right now in neither USA and European Union. Euro USD, almost the same story. Got bounce of the 61866, and guess where the take profit out of this trade would be? It would be yesterday, and I'll magnify it in a moment. Yeah, let's go to the hourly, to the 4-hour. Okay, so we have the 4-hour, and guess where the take profit would be? Here. This is the Fibception, the outcast trademark. I'm just joking with you, but we like to call it this way because it's a way how I like to trade. I know Mark loves to trade it this way, so you trade it from golden pocket to golden pocket. So it had a little bit of a complicated bounce of the golden pocket here, but taking profit here at Is it working now, guys? I don't know. It should. Anyway, so we have our checklist. I need to write it down. I have my outcast pen here, and so I'll write it down. Okay, we have microphone dead, so the stream can be the stream mission can be fulfilled. I hope it's okay right now. I just need to check. Cool. Cool, nice, now it works. Okay, so let's go to USD-CHF. I don't know if you remember what I said or if you heard what I said about Euro USD. Anyway, Euro USD, nice take profit out of the inverse Fibception, out the outcast trading mark. Feel free to use it whenever you want it because it's such an easy strategy. You just wait for 61866, buy it or sell it depending on the direction, make an inverse Fib pull and take your profit on the next 61866. And this is basically the holy grail of trading, and you don't need to know anything more. Just go with Fibs and moon cycles. Yeah, cool. Monday, yeah, Monday. Let go. So here we go with USD-CHF. USD-CHF, as we spoke, reacted of this liquid zone last few days. Right now trying to pop back up, trying to work its way a little bit higher. Overall, I'm still thinking about this scenario of this triangle and the measure move out of it. Will it happen, and will we hit above parity levels? Let's see. Overall, this is the final take profit for this trade. It's a little bit more complicated right now, but overall it doesn't look so bad. And if we go to the weekly, there is, I don't have an RSI here, but probably this is what I think about. It is a potential of a bearish divergence here, but overall it's another few days for the weekly to close, so let's see. Nothing from micro perspective. The markets are pretty boring right now and pretty choppy because there is no real news right now, not really much happening, and looks like the markets are waiting for something. So the key for me is to go with the with scalping lower time frames, which I did yesterday. After one loser, I got a few winners on the scalp. So right now our $50 balance is $172.77. Of course, we withdrew 2 weeks ago $80, which was half of the profit. So this is just a free money. So this is where your money goes when you lose money in the Forex market. It goes here. Okay, it's not much yet, but I need more subscribers. Then I'll have more here. I'm joking, of course, but let's go. USD CHF. It's just trying to bounce and go through this liquid zone. Overall, if you think about it, there is a little bit of a fake out here, but this is what I would call the range. So everything between the parity and 95,600. It's just a range. It tries to trend up, and personally what I think, yes, it will go higher. Will I trade it? No. Let's go to GBP JPY. This count is just pumping. Okay, so if you want to go short on GBP USD JPY, well, since December 2020 it was not the best idea. It's just, this shit is just going up. I feel like watching crypto right now, but on different scale. But if you think about potential risk-reward ratio, this is your 2020 whatever crypto home run. If you long there and just hold your trade, right now it's pretty far from the start of the swing. And you know, if something goes up, it has to go down, at least a little, at least a retracement. There is a liquid zone here. I'll go to monthly because we can see it even on the weekly properly. So here we have the monthly, and here is the weekly zone. So I'm really, like, I know I'm short-term trader, but I'm really curious and watching how this monthly will close. Will it give a swing failure, and will it close below the liquid zone? That would give me, basically, that monthly close will give me a signal, okay, I want to go short on it and go for a retracement, make my fib pull and look for a good targets. But if it closes above the zone, I think like targets 159, 300 and higher are pretty much possible. So let's see, let's wait. Everything from the EMA's point of view also looks good here. GBP USD, we already spoke about it. I'm just going through the list. GBP JPY is pretty much trading already above the liquid zone, which we had pointed out last week. And then we can, what I'm thinking about it, I think it has a potential to go higher. It's a pretty clean break, not really clean follow through. I like the follow through in the same direction. So, but overall, it doesn't look so bad. I'm pretty bullish on it. I think I'm pretty bullish on everything which is traded in Japanese yen. Good job, guys, keeping your interest rates still negative when the world is going to shit. Let's see how this impacts your economy. I don't have a PhD or whatever, but this is what I understand from the economy. In such situation, you should be raising them pretty fast. So what we have here, we have Mark's favorite coin, Mark's favorite asset. So there were two zones of interest which I spoke about, which I was interested in, and 61866. Obviously, the golden pocket was one of them, which is pretty confluent with this support coming here from this price action, the structure. So if you got your long out of here, let's see if it picks up. But already we can judge that our take profit would be around here. Okay, so for such trading, a little bit more of a midterm trading. That can be kind of a good idea. Overall, if we go on the weekly, there is a little bit of a trouble here with the price action, but everything is about 200 EMA and SMA. Those are still sloping up, not rapidly, but they are. I'm overall still bullish on the all long term. You know, like if we bring up the narrative of the limited supply, etc. Overall, until the electric cars will hit the market like 2035 or whatever the plans are to get everybody electrocuted. I'm joking, electrified. Then probably it will be time to go a little bit more shorty. With the Nasdaq. My trade concept on the Nasdaq is we are still in a downtrend. We had already 3 closes below the 200 EMA and SMA on the weekly, and right now what we're looking at, what is the potential of, and this is my trade concept, which I might be wrong. This is why I have risk management, which nobody teaches about. I manage my risk, and I manage my position size, and I'm capable of taking losers. What I showed you last week, we recovered from it. We were in nice profits this week. So, but this is like the life goes. If not about risk management, if not about managing my position size and taking out the losers before it's too late and my account goes to zero, this is what makes you last in a game over time, and it gives you a flexibility to make mistakes, which we all make. We're not perfect. I'll stop making mistakes when I'll start wearing the Gucci jacket, because then you are a guru and you don't need to make mistakes. Anyway, this is a backfill, in my opinion, on the weekly 200 EMA and SMA on the Nasdaq. I know, guys, there is a potential of a bullish divergence here. Overall, we are, and I have that on this chart since 2009. Since 2009, the weekly didn't close below the 200 EMA and SMA even once. So this is a little bit of a change of behavior, and of course it can go higher, but I'm bearish on it, and I'm still waiting for my 96.60. Maybe I will not get it, but it will be nice to have this target fulfilled. And well, what we can talk about, let's talk about gold. On gold, I'm short since yesterday on my main account, and I know it's not the best entry, but my short looks like this, that I'm managing above this 21 EMA, above those levels. I'm managing on closures, not with the fixed stop loss, but when I see the price coming back up, it's a swing short, it's a long-term position, so I'm not really paying attention to it too much, but this is a similar situation to Nasdaq, but a little bit different as always. We had a 2-year consolidation here at the top, looking like a distribution. Right now we had 2 weekly closures, bearish closures below the support, which is in my textbook, it's a break. Then the retest. Okay, a little bit deeper, but I mean, this is weekly chart, and the retest worked out. Okay, so I was a little bit late last week with taking this short, but I took it here, managing there, so it's like 3-to-1 risk to reward ratio potentially on it. I'll be happy to take this trade. It will take a while. I'm short on gold. Let's go with Australian dollar, US dollar, because we were watching it, somebody asked about it. So how's the situation with it? After break of this range, it came back to the next target, and right now, guess what? It's ranging in this zone. So this is the way I like going with trading. I like to find my working zones when the markets are ranging higher time frames. So this is my working zone right now. So this is where the price tends to move, and selling here, buying here, it's a play for me until it stops being one. Overall, still a downtrend. Overall looks like shit. Can't say nothing more about it. Euro NZD, once again in the range. This is what I told you guys. Liquid zone here, bounce. If somebody took short out of here, good job for it. Then we'll see if it hits the bottom of the range. If it hits the bottom of the range, then, you know, it's still a range until it's not broken. and the best way to trade ranges is just buy the support, sell the resistance until it stops working. So the last trade will be a loser, but it will also tell you that the range is broken and you want to switch to the other strategy, maybe some trend or looking for another range to be placed. US dollar, Canadian dollar, as expected, as predicted, bouncing of this support resistance here. This is the weekly chart, but this is it's bouncing off this resistance. If it breaks it to the upside, I'm looking for 141. 130. If it goes to the downside, I'll be looking for targets lower. And what are the targets? We can go with a big fib pull. I don't know, Mark, if I'm doing it correctly. So this is like the one, and the easier one probably will just go with this swing here, and this will be easier for my eyes. So I would be looking here for a potential buy, which is also confluent with the resistance out of this price action. So, well, this is all what I wanted to talk about the markets. And yeah, one more thing, because what I'm doing here, I'm just pointing out like where I would buy, where I would sell, what I will be trading. And look, guys, what about confirmations? Do you want confirmations here? Do you want the zone to be confirmed? So this is a question which I find pretty annoying over time. Like, I hear this bullshit about confirmation. Look, only way I'm using confirmations for my trading is when I'm looking for trend reversals to switch my risk management around and to put more weight on shorts than on longs, or vice versa. And I want confirmation when I'm trading a breakout. So if I have a support like here, or resistance like here, and I'm waiting for confirmation if it breaks out, because if it breaks out, that triggers me in a way that I can look for entries on the retest, okay? But I need the resistance to be broken and I need a confirmation for it. But if you're looking for a confirmation when the price goes into the support and you're looking for a confirmation that it will react to it, so first of all, you can be fucked in your ass pretty fast with it, because the price tends to confirm and then reverse. There is no real statistics about if confirmed support is playing more likely than not confirmed support. There are no such statistics. If somebody is telling you that it's a more probability, it's fucking not. Overall, if something is confirmed, there is no risk left on the table. If there is no risk left on the table, there is no reward. You can't have high reward with high risk. So if you want to be trading safe and have really low profit or no profit, because many times the confirmation will also be a measure move or a target hit in one dildo, and you can do nothing about it. Okay, it confirmed that it might take profit, but I didn't take a trade. Why? Because I waited like a cunt for a confirmation. There's nothing like this, and it's not knife catching. I mean, knife catching is when something is falling down. You have no supports, resistances on the way, and well, it's falling down rapidly. It's not the same. With when you know your levels, when you know your zones, when you know where you want to buy, however the chart looks, okay? Stop looking at the dildo shapes, because what we could see, like a few days yesterday or 2 days ago. So here we had a nice confirmation. I'll remove my I'll get my drawings here, I'll get them removed, and let's talk a little bit more about those confirmations, which are fucking nonsense. Okay, so here we had a nice confirmation. Okay, so here we had reaction of the support. Here we had the support, and here we had a nice confirmation. Okay, it reacted, it went up, so it's time to go long. Okay, let's go guys, let's go long, and then it fucks you in the ass. So this is what you do when you wait for confirmations. If you bought it just directly on the support because it is a support and you are supposed using TA to play supports, then you know, the pain would be less, because you could get out with the profit out of this trade, or with no loss, or with a small loss. But if you enter here because it's confirmed and then market dumps on you, like don't blame others, you know, like this is how it works. So this is the same with few different things in the market. Whenever the market confirms you the price, listen to the word confirm. If it confirms that it's already played out, it's already no risk left on the table. I know if you're playing fucking options, yeah, you wait for confirmation, etc. You have more time, you're managing your risk and time. There's different. But if you're a spot player, if you're trading with leverage, you're scalping, then honestly, I don't know better strategy than catching knives in this case. Because if you know your levels and if you're applying your edge, and for me it's buying the 61866, selling the inverse fib. So if you buy always, then of course sometimes you will have losers, because this is the part of every strategy. You can't be 100% right. But then first of all, you can manage your risk more tight, you can have bigger position size, and you can have a bigger paycheck, and you're paid for risk. You're a trader, you're risk taker, risk manager, and risk taker. So you have to take risk. When there is no risk, then it's nothing. And the last thing before I finish, because Michael yesterday asked me about something, and I just want to say about fibs. Okay, so the question was, when do I decide to use 382, then 0.5, then 618 fib? The answer is simple. Check it yourself what works for you the best. I know Mark is using the fibs which are looking. Okay, so let's edit it. I need to edit it. Come on. Okay, cool. I can edit the fibs. So what Mark is doing, he actually removes all of those. I'll leave 0.5. Oh, okay. Let's delete it. Okay. So this is how Mark's fibs look like. Okay, and this is his edge, and this is basically what I'm playing too. So we are focusing only on a certain fib most of the time. When I'm saying, okay, I bought 382 or 0.5 because there was confluence of the support resistance, is because I'm using a little bit different. And I'm really sorry, I can't sometimes describe why I took it, because it just comes from my subconscious. But sometimes I just feel, look at the trade and I see, okay, it's a good trade, it's a good confluence. But overall, first of all, decide which fib will you use. There are people who are using 382, there are people who are using only 0.5 retracement, which is not a fib, but it's a retracement. This is a 50% retracement. So there are people who will be using 238 or 236, I don't even remember. So you can see, guys, it's just a personal preference, and it's just something which works for us. And this is why we are talking about 61866. I can change it and I can make it different, and it will present just different statistics in the end of the day. So from my observations, I know when the price starts trending, the first retracement most likely will be 382 in a trend, okay, a first pullback, and then it will go higher. But with the fibs, it's not about where the price will go, it's about where I'm willing to take risk. I told you, we're the risk takers. So here I'm willing to take risk. If the price comes here, I'm willing to take the fucking risk. Why? Because this is the golden pocket, and I play it, and I have a certain statistics of playing it, and it works for me over time. So do I precise which fibs when, etc.? There's one rule which is called rule of 3, and I want to give you more of a secret sauce today. But rule of 3, look for free confluences, okay? So look for fibs and 2 other things, and you'll be fine with it. Okay, guys, I hope this answered all the questions for today. Not just check yourself, people need experience, and experience comes with time. Trade, see what works and what don't work. Go trade fuckers. Yeah, I totally fucking agree. Like, Frozen started like from scratches a while ago, and he's right now pretty nice performing on Forex. And I can tell you that yeah, nothing will give you the experience but your own trading, and just go trade. What I'm pointing out when I say like I'm trading golden pocket, It's just I'm trading it. I know the statistics of it. For me, TA, technical analysis, it's not a predictive tool. It's a statistical tool. So different setups of the indicators or the strategies just give you a different statistical output, different win ratio, different risk to reward ratio. And those two combined give you an edge. And this is how I approach it. So for me, taking 618, I'm taking it not because there is something magically happening there, but I know it just works for me over time. Or most of it. So yeah, go trade, fuckers, and it is a nice end of the stream. If you like today, like and subscribe, leave more comments under the video, tell me what you want to hear in the on the next stream. It was a pleasure talking to you. Take care and trade safe. See you.